we're going to kick off this panel. It's a discussion on how networks, PSPs, blockchains are enabling a bridge between traditional and crypto stablecoin ecosystems to simplify the on-ramping experience. And so what I really like about this panel here is that we actually have a visual representation of the developer user journey when you want to on-ramp into crypto. So I go to Avalanche, I want to top up my wallet. I got to use a Shift4 on-ramp to make that happen. My card credentials are run by Visa. Zero Hash then settles a crypto on-chain, haven't received the fiat. So this is where all your problems might be or maybe not be. So we're going to dive into that. I'll kick off first with just some quick intros on the team. So Eric, we'll start with you, just who you are and what you're working on, Ava.
Yeah, for sure. So my name is Eric. I'm on the BD team at Alva Labs. For those of you unfamiliar, Alva Labs is a primary software development company behind the Avalanche blockchain. In my current role, I'm head of DeFi. So I oversee the DeFi ecosystem, cover everything from AMMs to DEXs to on-chain lending, as well as derivatives. I also work with a lot of asset issuers, as well as critical infra service provider partners, such as Zero Hash. And before Alva Labs, I was in management consulting, advising corporate and private equity clients. So very excited to be here.
Right on. My name is Pietro. I'm the director of crypto at Shift4 Payments. We are a public payments processor. There's probably a lot of us in the room here from the payment space, but what we do primarily focusing on crypto is not only the payments processing servicing businesses on the traditional fiat on-ramp side, but also looking at ways to enable crypto as a payment method, as well as, make the on-ramping space a lot easier and consolidating, verticalizing the, I would say, advantages and value propositions of having a traditional fiat processor coming into crypto, taking that stack more vertical, and the great advantages and fee compression that comes from all that stuff. So that's what we're focused on.
Hey, this is Pete Wexler from Visa. First off, thanks for having us here. Thanks for having me here. My responsibility is business development on our crypto product team. I think some people in this room know that we have a crypto product team. For others, welcome. We have a crypto product team, and we've really been at this for quite a bit of time. We actually released our first card with Coinbase, I think 2015, that allowed you to kind of pay against a Bitcoin allocation that you had on your custodial account. We actually have 50 plus issuers who issue 50 plus crypto companies that issue cards with us today, allowing a nice off ramp from your crypto balance. As well, we support the concept of settling your obligations, enabling issuers to settle their payment obligations to Visa in stablecoins today, which is pretty cool. A whole host of other activities. So yeah.
Excellent. I think this mic works here. We're good. So I'll start off with Eric. Eric, we launched USDC .avax and AVAX Direct as well on Zero Hash, and then there was a recent announcement too with Avalanche partnering with Stripe and other on-ramps to enable developers to easily access crypto. What's some of the big unlocks that you've gotten from having those types of partnerships and relationships at Avalanche?
Yeah, I think that's a good question. So the partnership with Zero Hash, first off, has been a fruitful one. Zero Hash powers a lot of the on-ramps, especially here in the US. Everything from MoonPay to Shift4 to Stripe. And with the Stripe partnership specifically, Stripe does carry that brand name, right? Even outside of crypto for payments. So a lot of crypto native projects that were, I would say, hesitant to integrate other on-ramps, jumped at the opportunity to integrate Stripe. And a lot of the use cases that we've seen are actually outside of my realm, outside of DeFi. Because with DeFi users, a lot of times their funds are already on-chain. There's no need in many cases to on-ramp. So we've seen the most uptick actually in gaming, consumer products, as well as just general infrastructure offerings. Some Avalanche projects is a DeFi Kingdom, Shrapnel, both are games, as well as Gogo Pool, which is an infrastructure provider for validated nodes, as well as custom blockchains. They've integrated Stripe for easier on-ramping for their core constituents, which are usually retail users leaning more towards normies coming into crypto. I would say that there's still some ways to go. Like, for example, UX is still not great for a lot of on-ramps. And this is not like a Stripe or Zero Hash or Shift4 issue, right? One example is, when you make a credit card transaction in the real world, merchants pay the interchange on behalf of the users. But in crypto, you're on-ramping $100 worth of USDC. you're paying 105, right? That's just it doesn't feel good for users. So I think there's some ways to go there. There's some optimizations we can make, but it's definitely a step in the right direction, especially for, verticals like gaming, where they are actively onboarding normies, but also those normies may have a stigma towards crypto. So it's an important tool that we have in our ecosystem and something that I would like to see more integrated throughout.
I'm going to pass over to Pietro on that, given that you're probably the next person in the stack. Like fee compression, easier onboarding, lower fees. What does that look like at Shift4? And maybe you can expand more on that there.
Yeah, it's a great question. I think that's the ultimate question that everybody's trying to answer in our space, right? How do you translate fiat value into crypto value in a way that is not a sticker shock to the consumer, but also in a way that makes sense and is technologically sound, and I'd say up to the standard of the crypto industry, right? In many ways, traditional payment processing is technologically, the dinosaur. We're catching up. I think we're doing a good job at that. What does that actually look like? I mean, from an on-ramping space or from an on-ramping perspective, it means when you're offering an on-ramp product, one, working with the right partners and tech stack to allow for a regulated product that is global in reach, right? You don't want to have 4 different on-ramps for 4 different jurisdictions. That's, I think, the very obvious and easy answer to that. And then I think it's combining what is the traditional margin center of payments and bringing that as close in proximity to crypto as possible. So you're not having 4 or 5 different middlemen taking interchange here and then, settlement fee here and then an APM fee here to then, like you said, get a 5% markup on what is $100, which, when you look at the competition of moving money in a PayPal or a Venmo or something similar, right, that doesn't really work for consumers, or at least it's an experience that could be optimized. So where we bring our on-ramp, our experience in traditional payment processing and saying, okay, let's make sure that the fees are in line and reasonable and that we can reach consumers where they're already doing business, enabling new payment methods, enabling, different ways to on-ramp in so that you're not going through this 4 or 5 step process that, all of us who've been in crypto for a couple of years are already familiarized with. But in reality, it's a little bit of Stockholm syndrome. It can be better,
And that's one of the key differences in the market today of Shift4's on-ramp versus, say, maybe the market incumbents that are there, where you actually own your own acquirer processing rails. You've got that direct relationship with Visa or MasterCard for the card processing. So maybe you can just unpack maybe some of the things you went through when you were launched with Zero Hash. What did you see as the problems in the market that you were going to jump in and attack, and how does that differ to maybe the current players in the market?
Yeah, I mean, I wouldn't even call them problems. I think it was just the natural evolution of the space, right? I think you had a lot of third-party on-rampers, and I think they're all very, admirable in terms of what they did for bringing the industry forward. But when you realize that if you're an on-ramp business and you're taking a margin out of a spread that you're charging to a user, right? On USDC, it's very apparent, because when you're charging $1 plus for something that is $1 value, that becomes very apparent. It's different when you're selling Bitcoin at 64,000 when the price is 63,000, charging a spread there. When that's the only way that you can monetize that relationship with the customer, because you're not processing the card payment itself, or working with Visa and MasterCard on the settlement, or doing the FX component of the trade if it's an international consumer, that's where the spread or the margin kind of blows out. That's where we saw an opportunity to say, well, let's use our expertise in everything traditional and bring that to the party with, liquidity platform and licensing platform like Zero Hash, or, working with the right partners in the crypto space who understand that that is the ideal state of the world that we want to be in, because that's what their consumers are ultimately demanding. I think crypto is one of the few places where you can charge a 10% markup and people don't bat an eye, but, in reality, I think that's going to change.
And then, Peter, you guys at Visa sit sort of on top of all of this here as a card network. What are you guys looking in this space? You mentioned earlier about settlement, about a few other projects that Visa's working on the crypto team. How's that shaping up on your side?
Yeah, so, in addition to just enabling crypto wallets to issue a card and do off-ramping, and also, of course, the second step we took was simply allowing people to use their, Visa card to buy Bitcoin, buy NFTs, et cetera. Really the third component we enabled is enabling our issuers to actually settle to us in stablecoins. Today, we support US dollar coin as a settlement currency on our network. And as well, we support the idea of paying out acquiring banks in US dollar coin, which then can be shifted onto a merchant. most people don't know that settlement only occurs 5 days a week, or if there's a bank holiday, it's only 4 days a week. So, the authorization stream, when you go and make a purchase, you're getting your coffee instantly, you're getting your sweater from the Gap, whatever the case may be. But money doesn't move like that. The actual money doesn't move. It moves on settlement, which is using, Fedwire, it's using Swift. But today it also uses blockchains. We support Ethereum, we support Solana as chains to move funds. But with that comes the idea that we can actually do that 24/7, 365 as well. So, one of the things we're looking at, of course, is our ability to kind of, revamp how settlement works and enable money to move faster, more consistently. I think that has a lot of positive implications to, merchants at the end of the day. The idea that you can actually get paid, let's say every day, or even maybe every hour or every minute. As well, for an issuer that works with us, there's, a concept of collateral, there's risks that we take. But the idea that we could actually collect money more often could reduce, collateral obligations to us. It de-risks it for us. So there's a lot of things we're working on in regards to that. There's a lot of interesting companies out there. I know Rain's in the audience. There's a lot of people that are making it easy for, these wallets to actually issue credentials and actually handle that authorization stream and check against a crypto balance in real time to auth the transactions. So there's a lot of tech enablers popping up to actually really make these wallets very effective. And I think, globally, and I think a lot of people mentioned it, there's just a prevalence for people to hold wealth in stablecoins. So if you're in Latin America, you may not desire Argentinian pesos, you may desire a US denominated stablecoin. That's just a very logical thing. Other countries as well. And then tying that to credentials is just a really awesome way to kind of preserve wealth and then allow, of course, people to spend. So a lot of good activities happening on our side, and we'll continue to kind of build out solutions for the market.
And then back to Pietro, as the card networks start to develop the processes and provide more guidance, maybe and insights, what sort of guidance and insights are you looking from the card networks with regards specifically to stablecoins and how they're treated?
Well, I think stablecoins being the thematic element of this discussion is really helpful. And maybe I don't want to steal Peter's thunder here, but Visa.
Please steal my thunder. Well, I grant you full thunder. Go ahead.
I'm always happy to talk about Visa in a positive way, but they've issued a report with Castle Island Ventures, Brevin Howard, Artemis, a few other folks talking about what are stablecoins, these stablecoin users and adopters actually using stablecoins for, and that will, instruct and educate us in terms of the insights of what does the daily, transaction volume of a transaction look like, or what does, for example, like an average person in Nigeria or Indonesia use stablecoins for. A ton of them, I know we were talking about yield earlier, but a lot of people are using it as a US dollar banking rail effectively and diversifying their fiat currency across a network that's online and, giving them more financial access and inclusion than they otherwise would have locally. I think, what does that mean for us? Well, one, it means we need to seek out those corridors and enable our platform to offer those local payment methods to get to the last mile where the consumer may be using something more akin to a Pix or a fintech app as opposed to their card. Or they're using like an APM or an e-wallet that maybe leverages their card, but is just a form factor that's different. So having all of those things inside of your on-ramp or your tech suite is important. And then as far as Visa and MasterCard are concerned, we're always looking for enhanced guidance on the best way to optimize our approval rates, because many of us have probably had a crypto transaction where you try it, your card is legitimate, but it doesn't work. And so optimizing that down the stack so that you can, with very strong consistency, have an approved transaction is the ultimate goal, because we don't dictate what the market wants. We're sort of responsive. We just need to make sure that everything works when people come to us.
And that's what we're seeing then on the developer side, where you want maybe standardized MCC codes for stablecoins versus crypto assets and more definition on those types of transactions.
Well, 100%. So for anybody in the payment space, right, a 6051 transaction for, liquid crypto asset is what you would categorize a sale of USDC for. Granted, I'm not here to rewrite anybody's, guidance on this, but it would be interesting considering it's just dollars and dollars, like dollars in, dollars out, USDC. Like maybe there's an ideal world in the future that we get to that could be interesting. change that up. Yeah.
Like we can ask Peter now. Which have a job. Eric, back to you on Avalanche. I spotted this week you guys hit like a all-time high for TVL locked on stablecoins. Congrats on that. The second piece is that we also launched Euro stablecoins and zero hash on AVAX. Maybe you can give us some idea on like what that future looks like on the Avalanche side. How are you guys growing the TVL? Are we going to see more fiat stablecoins coming in the future? Maybe you can share more on that, some insights on that.
Yeah, of course. So I think as with any blockchain, right, stablecoins are critical to the ecosystem success. I would say out of the billion plus TVL on Avalanche, about half of that is probably stablecoins, mostly USD denominated, of course. And we're closely following the non-USD stablecoin ecosystem out there. I think it's after USD is probably euros, and then followed by Japanese yen, and I think Singaporean dollar. And the reason you see that kind of trend is because in Europe and Asia, we found there to be just a more mature regulatory framework when it comes to crypto and stablecoins in general. In Europe, you're seeing things like Mika. You're seeing we see a lot of retail focused use cases such as payments, remittances. Some companies are using stablecoins for payroll. Whereas in Asia, you're seeing more along the lines of public-private partnerships. So places like Singapore, Korea, Japan, where crypto in general is heavily regulated, but they have an openness to work with private enterprises and asset issuers to see where kind of where the technology goes. So we're following the space closely. I think on Avalanche, when it comes to EuroC, there's about 20 mil or so minted compared to 2.3 billion USD stables is still pretty minuscule, but we see that as being the next kind of lever for adoption here.
And then we've got a few minutes left here to wrap up, but I want to kind of get each of your thoughts on where you see demand for stablecoin on-ramping evolving over the next 12 to 24 months. So Peter, I'm going to start with you.
Oh, I really wish you didn't start with me. I think, and I think you mentioned it. It's for some, it's not about yield, and I was talking about it a little bit before as well. It's about just wealth preservation, and I think you will see more and more global adoption of a U.S. denominated stablecoin, euro denominated stablecoins. There's a strong desire to hold these currencies, and it's very difficult to hold these currencies in certain markets. But with crypto and wallet proliferation, and with wallets getting easier to use, which is definitely occurring, kind of slowly but surely, I think you'll see a lot of adoption globally. I don't think that crypto solves all the problems in the U.S., but it solves a lot of problems in a lot of other regions. And even for Visa, we have banking partners that simply have trouble acquiring fiat USD. I mean, there's liquidity problems with the U.S. dollar in certain markets. I think you'll see more adoption by large financial institutions in those markets with stablecoins. I think for stablecoins, the future's bright, and thanks for the shout out on the report. Actually, you can also check out Visa. This is my plug. VisaOnChainAnalytics.com is where we're tracking stablecoin activity across a variety of chains, across a variety of stablecoins, and we put a lot of work into that to kind of really kind of one, showcase kind of the adoption, two, try our best to cut through the noise and kind of identify what's really occurring and kind of what's we perceive as kind of real money movement and what may be a little bit of kind of bot noise and kind of washing. So.
Sure. I mean, I'll try and be as concise as possible for time, but I think especially as it pertains to stablecoins, it'll be the rise of the non-speculative use case. So if we're talking 3-5 years from now, wouldn't be surprised to see on-chain stablecoin TVL, if not pushing 10 trillion, maybe, right around there. I think not to be a geopolitical macro person or anything, but it's the most efficient way to export the dollar and to bring liquidity to those corridors that otherwise can't access it. And I think for the average person to feel like they're participating in a global financial system that is robust and in the 21st century, I I think at the end of the day, stablecoins will bring that in a much more rapid pace, especially as we have, a rate cut cycle that we're going into, potential for more inflation, global liquidity rising from central banks. I think stablecoins are going to be the lifeboat for a lot of folks. And I think we're finally at an inflection point where the technology and the rubber can meet the road, where we're ready for that adoption, as opposed to 5-6 years ago where, this was still very much a dream,
I think actually that relates well to the Visa report as well, where you had that divergence between the speculative trading activity and more real use cases. So it's interesting to see that. Eric, what's your thoughts to close us out here as we got a few minutes left?
Yeah, sure. So I'll keep this short too, but I kind of agree. Whereas I think stablecoins are probably one of the few on-chain assets that have the potential to be larger than crypto-native assets. And I think there's going to be a few drivers. One, there's more and more L2s and L1s launching. Stablecoins, especially between chains with different VMs, right, like Solana and Avalanche or Sui and Cosmos, stablecoins are really going to be the conduit for interoperability. I wouldn't, use Ethereum ETH, right, for instance, going from L2 to Solana. And then the second thing is, I think over the last year or so, we've probably talked to 40 or 50 new stablecoin issuers in the market. Obviously, we're not going to work with every stablecoin issuer, but it shows you that, there's a lot of experimentation happening. There's yield-bearing stables backed by T-bills. There's stablecoins, well, quote-unquote stablecoins like Athena, right, where it's backed by, derivatives with on-chain trading or trading at centralized exchanges. So you're going to see a lot of different flavors, a lot of different issuers kind of trying to get a piece of the pie. And the pie is going to grow over time as a result. So we're big proponents of stablecoins on Avalanche, and we're excited to see its growth.
Excellent. Well, thank you very much, panel. Appreciate the time.